Is that the case for commodity space as well? Perhaps we'll get to Manisha and she'll tell us the commodity that she's tracking today. Manisha.
Well, thank you for that, Mangalam. I'm looking at an underperformer within the metal space, and that clearly is iron ore prices. We saw nearly 7% of a decline at one point in time in the China markets there. So when you look at the last year, it was a 25% of gains. But in last 1 week, we've seen 4.5% of decline. The last month has seen 14% of a cut. And in this year, until now, we are down by 25%. So all the gains that you saw in the previous year are done away with in the first 3 months of this year itself. This is to tell you on how the iron ore prices have been moving. Well, we did see an all-time high of $229 a ton. That was way back in July 2021. By 2023, we did see prices decline quite a bit. In 22, we saw a low at $85, and from since then, it really has been between 85 to 150 on the higher side of a range that the iron ore prices seem to be trading within. Now, when you look at 23, the range, the lowest was 99, the highest was 145, and that's exactly how we started January 2024 as well. We started Jan with $142 a ton, and currently we are trading at around $110 on the lower side here. So it has been a sharp correction that we've seen on the lower side. As you can see, it only has been a one-way decline that we've seen in case of the iron ore prices in this year until now. Well, China accounts for 70% of the global seaborne iron ore, and we do understand that the inventories there are quite strong. This is what we've done in sense of million tons of trade for the last couple of years. It has been increasing, and as I said, even at 1,700 tons of an anticipated global trade of iron ore for 2024, 70% of that will happen from China, and that is where major concerns really seem to be building up in. So when the property demand comes in, that number has been on the weaker side. The last few data from China have been slightly positive. So whether it's about shipping, machinery, auto and infrastructure, we have seen some better steel and iron ore demand coming in, and that is perhaps where we are getting support from as well. But it also has to do with the high iron ore inventories. Australia and Indonesia are pushing out a lot of iron ore. Yunnan in China is saying that they will cut steel output by nearly 300,000 tons to 500,000 tons. So that would mean lower iron ore demand, and that's weighing onto the prices as well. Also, with Moody downgrading the second largest property developer in China, Vanke, to junk rating is also weighing onto the markets, with Street now telling us that while the iron ore prices are trading at 110, but watch out for $100 a ton as well, and that could perhaps happen in the next couple of months itself.
Okay, thanks a lot for that.